Okay guys, welcome back to our channel. Thanks for tuning into today's video. We're going to do a Luna update and just talk about the price action and talk about where we think the price is going to be heading in the next few days, potentially in the future. Obviously, Luna's had a lot of hype around the coin. A lot has happened around Luna. Of course, we've had that significant crash, wiped off billions and billions of dollars of the market. And of course, launching their V2 token, which is pumped considerably from that low, and has dropped down to about 690 now. We're going to talk a little bit about the price action, talk about where we think it's going to go, and answer a few community questions later on in the video. Let's go ahead and dive right in. So to start with, we're just going to go ahead and input our lines. Now, we do not have a lot of chart data in the sense that we are kind of going to be ignoring everything up until this point. So everything from obviously from here onwards, we're going to be kind of ignoring everything back there. So we're just going to be assessing a chart from this current block of price action from what was it, the 31st of May 1600 onwards. So we have this downward trending resistance line that we can go ahead and input on the chart over here. And what we can do is we can copy and paste this one back down to the bottom side. We're just going to go ahead and duplicate that. And we can put that on the bottom side, and we do notice that we have a descending channel formation, or what you would call a bull flag. Now, bull flags are generally shorter term. This is only about 4 days, so we can pass this as a bull flag or a descending channel. I would more likely pass it as a bull flag. What we can notice is we do have 1 test, 2 tests, and 3 tests. We do need at least 3 tests on one side and 2 tests on the other. This does suggest that we do have a possibility of heading back down to have one final retest before we move upwards and get a breakout upwards. Assuming that the breakout happens now, where could the price go? So we're going to take a quick measured move of the width, or should I say the depth of the channel. Doing the measured move in the sense that it is a descending channel. We take that initial high, draw it down to that first retest at the bottom, copy and paste that over, paste it above, and that is where our price target would be. So according to our measured move, our price target could take us just over $10, and I'm going to move it up to $11 at the $11 psychological resistance zone. That would be our first major target, and of course, according to that measured move, that first range will be sitting here. Now that actually does meet up with this previous resistance that we did find temporarily at around $10.90, dating back on the 11th of May. So historically, this does line up with our previous price targets and our previous price action. Of course, with our measure move, it does tell us that we can expect to move upwards. So what happens if the price drops below here? Of course, we do have this uptrending resistance, or the uptrending support on the smaller time frame, which is kind of providing a basis of support for the last 2 or 3 days of price action. And we are quite above that now, but if we do lose this support level over here, we can expect a pretty significant drop down and then a slow bleed, potentially lower, and I would expect the price to come down, not to retest the bottom of this channel, but I think we could come down anywhere between this point here and this point here into the support demand zone. And I would expect a bounce from that demand zone and then a retest or a push upwards to break out from the descending diagonal resistance that we see on the chart here now. So some sort of bottom over here and a push and break upwards, continuing up. So I think the short term for Luna, if we ignore the next, say, 24 to 48 hours, I think anything over that is looking pretty optimistic. I think it is destined to rise at some point. The question is it going to be moving upwards now, of course, or is it going to be moving upwards in the next few days? So let's go ahead and do a quick technical analysis, bring up some indicators and see what we can see on the chart. So we'll start the RSI, and of course we're ignoring everything from that 31st 1600 onwards, just utilizing what we have on the chart right here. We can go ahead and draw in our descending resistance on this RSI chart, and of course this is going to be acting as our momentum shift or our trigger zone for this breakout. So what I mean by that is we want to see a breakout of not only the downward trending diagonal resistance, but as well as the downward trending diagonal resistance on the RSI to confirm the move upwards. So what we could see over here is we could see the price push up, all right? The RSI doesn't push up, gets rejected here, and the price will continue back into the channel, having a fake out before we find a new low, and of course, waiting for that RSI to break, and that will break at the same time. So we're always waiting for a trigger, we're always waiting for confirmation of the next move. For the price to break the descending diagonal resistance, we would also need the price to break, or for sure, so the RSI to break above that descending diagonal resistance at the same time to confirm the move, right? If it doesn't happen, the move isn't confirmed, the momentum is not favorable, the momentum's not positive, and therefore we have to assume that we could see some sort of fake out on the price action. So waiting for both those things to happen, either simultaneously or within a very tight range, so an hour or two, or a period or two on the chart would be ideal, okay? So let's move on, let's take a look at our Ichimoku cloud. And Ichimoku cloud is looking pretty good, guys. So we do have that price action right now, which is above the clouds, which is nice to see. I do want to point out that the lagging span on the 30 minutes is still within the clouds, which is obviously a bearish sign. Bearish, bullish, it's kind of neutral. It does suggest that we don't have a confirmation in the trend. What it is telling us, though, it is telling us, A, we have the price above the clouds, which is simulating a uptrend or forming an uptrend or a trend reversal. We have the price breaking just above that conversion line. We can zoom in over here, you can see the conversion line being the blue line, which is signaling a short-term entry, but the lagging span is still within the cloud. So this is saying that we could see a move upwards, but it's hard to tell if it's going to be a sustained move upwards. So again, this is where we use these confirmation indicators such as the RSI breakout and the lagging span breakout to confirm the trend direction. So just because we break upwards here, what it's telling us is there's a pretty high chance we're going to break out of this descending trend line, but it isn't a pretty high chance, or it's not a very high chance that this breakout is going to lead to a continued move upwards. From the data we have right now, we have to assume that there is a possibility for a fake out to occur or a fake break to occur to the upside and a retracement. So right now, Ichimoku cloud is looking good. It is not looking amazing. It is looking good. It's definitely something to keep an eye on. So moving on from there, let's go ahead. Bull market support band again. Similar to what the Ichimoku cloud is telling us, it's telling us that we are pushing through a pretty major zone of contention here, which is this downward trending resistance lined up with the bull market support band, telling us that this area here is going to be acting as a pretty major resistance. And if the price can get above the bull market support band, it will in turn break out of the descending diagonal resistance that we see over here on this chart. And then obviously we do have the issues of the RSI and the lagging span. So guys, I think that's about it. There's nothing else I really want to go over for this right now. Maybe the Gaussian channel. Let's take a look. And the Gaussian channel is telling us the same thing. It's flipping green, which is I see the price is pushing upwards. It does suggest that potentially we could see a move in either direction over here. If we flip the chart, we do have an ascending channel formation, and this ascending channel would suggest, a downwards break at some point, all right, and that would take us down to this level here. The only issue is that we don't have enough points of testing to confirm this move. So we only have really 3 points of tests. We need 5 points. We need 3 on one side, 2 on another. We don't really have that yet. So we need at least one more test somewhere before we can confirm this move. Right now it is up to speculation. We do have a degree of bullish evidence, but we do have a degree of evidence that is suggesting, maybe this move upwards could be suppressed. So all in all, guys, it is looking more bullish than it is bearish. The macro structure, of course, is a downward consolidation, but it is a downward consolidation, a bullish consolidation, which we do anticipate a move upwards at some point. The question is whether or not we're going to be pushing upwards immediately, and we've told you and given you a few pieces of evidence that suggest we can. And then, of course, are we going to be pushing downwards before moving upwards? And we haven't really provided you anything that suggests that, because there isn't really anything that suggests that technically. But if we're talking the market structure analysis does indicate a move downwards from here again. So we're utilizing the RSI and we're utilizing the lagging span to confirm the next move. Once that move is confirmed, we can then act based on that with our target prediction, maximum target around this level over here. And of course, you can take minor targets along the way. So, 750 level moving upwards, you got your 818 level moving upwards. You can go ahead about 920, and you can take take profits along the way, and of course that 10 level, so you can take your profits along the way. So guys, I hope that's been helpful. I do want to go over a quick community question. We're going to go ahead and flip over to this chart over here. So sorry, it says, hey MegaWhale, what are the chances of a separation of Bitcoin from the traditional financial markets, and the chances of Ethereum separating from Bitcoin? So I'm going to go ahead and bring up some other charts and talk about this. We're back in a sec. Okay, so that's a really good question. We're going to go ahead and answer it now. And here's, of course, a Bitcoin chart. And the question was, will Bitcoin basically essentially decouple from the financial markets? And the short answer to that is no, I don't think so. And I think it really is because both Bitcoin and traditional financial markets kind of operate on the basis of a transfer of value, and we use the dollar as that means of transfer. So what it actually means is the decoupling is the moment when Bitcoin price essentially diverges from equities and starts to go up when equities start to go down, vice versa. And decoupling is the moment when Bitcoin and equities become negatively correlated to each other. Now, that's the problem. And we talked a lot about the DXY in our previous videos and how we've proven the fact that Bitcoin is a risk asset and is bound by the same regulations, or should I say, the same theoretical rules and impacts that the current financial system or fiscal policies impose on other asset classes, particularly risk asset classes. We've seen how inflation increasing has impacted Bitcoin. We've seen how interest rate rising has impacted Bitcoin. We've seen how companies sell off or reduce balance sheets has impacted cryptocurrency and Bitcoin. Similar to how it's impacted equities and shares and bonds and other risk assets, housing prices even. So the reason why it's all connected is because when you buy another asset class, whether it be an equity or a stock or a bond, you're purchasing it with dollars. You're purchasing it with US dollars or Australian dollars or whatever, and you're expecting a return on that investment. It is kind of the monetary basis that builds up the financial system, the dollar. And if you buy Bitcoin, you're buying with dollars. So until we get a separation between Bitcoin and dollars, I don't think we're going to see the Bitcoin or cryptocurrency market decouple to the extent that I think you're asking it from a financial market. That's just my personal opinion. I think it's going to be tied in. I think there will be periods of negative correlation like there are in most asset classes, but generally asset classes are more positively correlated than negatively correlated. So for example, let me show you. You have asset number one. All right, asset number one. You have asset number two. All right, these are different asset classes, all right? So let's say different asset classes, all right? And within asset classes, so there's hundreds of different assets. So you got, for example, cryptocurrency, yeah? You got hundreds of different coins. Let's just give you 2 coins over here, for example. So coin 1, coin 2, and we'll say this is a stock market, right? Coin, stock 1, stock 2. So generally when the stock market increases, both assets within that asset class increase because there's a positive correlation. It's usually around 0.7. The correlation is around 0.7. The question is, or the difference becomes in the correlation is maybe this one, so maybe number 2 will increase a greater percentage than number 1. And you hear the common saying, it's not about it's not about which asset class you're investing, or should I say, it's not about which asset within a class that you invest in, it's about the asset class itself that you're investing in. That's the most important thing. So same thing with crypto. We've seen it. Maybe one coin goes up, 1,000%, the other one goes up 100%. But when the cryptocurrency market is increasing, we see both of these increase. So it's kind of tied in at the same time. There's a correlation between these asset classes, being cryptocurrency, stocks, risk assets. There's a correlation between those asset classes. So until that correlation between the asset classes over here breaks, we will not see a correlation between asset classes performance change. So there will still be a coupling between performance. Now, the degree of performance is always going to vary. There's always going to be variation between individual assets within a class performing against other individual assets within another class. There's always going to be a degree of variation, but the coupling itself between asset classes are strongly correlated to about 0.7. And we're seeing the traditional markets, of course, fall. We're seeing cryptocurrency fall. We're seeing the housing market fall, well, starting to fall at least, and that is because they're all correlated to the dollar. When the dollar rises, the asset class falls. All right, it is really as simple as that. So my answer is no. And now moving back to your second question, which was, what are the chances of Ethereum separating from Bitcoin? And we're kind of just giving you that same kind of answer in that chart over here, which is, if we take a look at this and we say this one's Ethereum and this one's Bitcoin, if the cryptocurrency market rises, both of these rise. The degree of percentage change between the two assets within the asset class may vary, may change, because there's less of a correlation, all right? In the sense that there's a correlation that they both rise because they're in the same asset class, 0.7, but the correlation between the percentage performance between these assets may vary based on a whole range of other influences or factors. So I don't think that your question states it correctly. I don't think the chances of Ethereum separating from Bitcoin, I don't think Ethereum will necessarily ever separate from Bitcoin because it's in the same asset class. I think the performance in comparison to Bitcoin may vary over time between percentage returns based on future developments, based on technological advancements, based on partnerships and use case, all these other various different things, whether or not the system and the technology can withstand the demand over time. That's another thing. Fees and prices, gas fees, of course, is a big one. So there's a whole range of different factors that can influence that. But I hope that answers your question. My overall answer is no, and not for the time being. Maybe in the future, potentially, but under this current system, under the current monetary policies and financial systems, I don't believe so. All right. If you're interested in finding out more, just stick around to our next videos. We'll go ahead and we'll talk about this more in another video. And of course, if you like the content, consider liking, subscribing. Our channel's blowing up. It's going really well. I want to see just hit 3,000 guys. At 3,000 subscribers, every single person who is subscribed will be entered in a giveaway to win $100 each. So we're doing 3 winners, so $300 giveaway at 3,000 subscribers. If you're subscribed, you're automatically entered. It's going to go through and pick 3 random people from our subscriber list. So make sure you smash that button. And of course, if you're interested in a VIP channel, you can go ahead and contact me on our VIP channel over here. We have over 420 members. We've had an amazing last month with over 1,000% profit. We had 29 wins. Only 3 losses, you can see over here. If you're interested, the pinned comment down below, you just go ahead and contact me for more info, and I'll catch you in the next video. I wanted to quickly introduce my new favorite exchange, Bitget. Bitget is a non-KYC exchange, which is particularly beneficial for members in the UK and Australia who are limited by certain trade restrictions. Bitget has 250 plus spot trading pairs, as well as 60 plus leverage trading pairs, up to 125x leverage. Sign up now in the link in the description using our referral code to get up to $153 in rewards for completing 4 separate tasks. Let's go ahead and dive back into the video.